Bro,
Sure.
yeah, no, Spagat inside. So we've hit don't lose money, right?
Mm.
You've shared what you look at. Let me say, as a first, I spot that I've shared what the first thing I look at. There's obviously other things, but at least we've covered don't lose money, right?
Yeah.
From don't lose money, where do we go?
So a stock, right, can or an asset can only do one of three things as far as price is concerned.
Yeah,
Either it'll go down, stay where it is, or go up.
yeah,
Right. So if
yeah,
it goes down, does it go down? Does it go down to my stop loss point? If
yeah,
it does, I know, I'm not going to sleep with a bigger loss than I had, um, you know, than I expect, because I have my stop in place in the market, right? My stop
yeah.
is going to get hit, and unless maybe it gets through my stop and then I take a slightly bigger hit, but that's less of a problem.
Slow down.
Um,
Slow down.
because sometimes, right,
It gets hit, and you're there wondering, okay, you said a share can go up, a share can go down, and a share can stay where it is. Jiggy
yeah.
jiggy, there's stops, there's someone getting hit. Hey, hey,
So remember, when I'm buying a stock, my stop loss is below the market to
what's a
protect
stop
me in case.
loss?
A stop loss is an order I place on the market to sell the stock at a particular price. So I put an order in the market to, if this stock trades at this price, sell.
Okay, so it
Right,
can be
whether
high
I'm
price
there or
and a
not.
low price.
Yeah.
Okay.
So if I'm buying, that stop loss order is at a lower price than I had bought, right?
Yeah.
But as the market moves in my favor, that stop loss can be higher than I would bought, but it will always be below the market.
Yeah.
If I'm in the position, right? So now
Yeah.
I've protected myself in case the stock is going down.
Yeah.
Now, if the stock stays where it is, I'm not happy about it, but I'm okay.
Yeah.
Because my risk is not hit, right?
Yeah.
And then if that doesn't happen, I'm only left with one thing: the stock is going higher.
Yeah. Okay.
Right?
So you're saying you'd put, let's say, an insurance product that says if this thing goes slightly below what I bought it at, or let me
Yeah.
say below what I'm comfortable with,
Yeah.
and that comfort can be gotten again. It's charts, it's certain items that you can essentially set on your screen when you're trading, right?
Yeah.
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 And you saying that, okay, if I put that in place, meaning that if the share drops, I will sell that, because you don't care about the quality of the company. Because I
Yeah.
would say if a share price drops, I buy more of that company because I want more of it.
Yeah.
Whereas you would say, because I'm only looking at price and I don't know the quality of the company behind it, I can't take the risk that when it goes down, I buy more, because I could be owning Steinhoff, and buying more in that instance is not going to help me.
Yeah.
Yeah,
It's gonna clean me out.
it's going to clean you out.
And
It's going to take out all your
yeah.
money. Yeah. Okay.
Yeah.
Yeah.
And when I'm trading stocks, to that point, when I'm trading stocks, right?
Yeah.
Half of those companies, I had no idea what they were doing to make money.
Yeah.
And it didn't matter to me.
Yeah.
Right? What matters is what the price was doing.
Yeah.
Yeah. But on the 12 rules for trading presentation,
Yeah.
I'll make an example with my MTN trade. I sold MTN at 175, right?
Yes.
Because my stop loss was hit. To
Yes.
this day, and I sold it sometime last year around this time, right? Around May last year.
Yeah.
To this day, it hasn't traded at 175.
Okay. Yeah. So you don't own it.
When I sold,
Yes.
When I sold, I had no idea that the stock was going to go to 107.
Yeah.
Like, I had no foresight of that. And because I don't understand or don't necessarily know the underlyings of the functions of the business, and I can't read, financials like you can, I can't rely on that information. The only
Yeah.
information I can rely on is what I can see on the chart.
And what's interesting that you're then bringing up in that regard, né? Does that then explain why I, for example, would often be a market commentator? And I would say, yeah, but the price doesn't tell you anything about the quality of the company. Price is just price.
Yeah.
And why I would say, don't look at your portfolio and say it's a bad company because the price went down. You don't know why Njabulo is selling. Njabulo is selling just because his stop loss was hit. He doesn't even know what the quality of the company looks like. Yena is just in the
Yeah.
business of making money in between the candles or in between the certain, the price action.
Yeah. Yeah.
This company has a new CEO that went to Harvard. You don't care. You just saying, I'm going to make 1 rand 10,000 times and I'm going to get out.
Yeah.
And that's it.
That's exactly it. Yeah, that's exactly it.
Yeah.
Because I don't understand or know the underlying
Yes.
functions of whatever business that's there. And it brings me to the first rule of the 12 rules for trading.
Yes.
Uguti, it's a solo sport. You have to do your own thing, right?
Yes.
Like you and I are doing the same thing. We're playing in the same sport in terms of we're trying to turn 1 rand into 2
Yes.
using financial markets, right?
Yes.
But how you do it and how I do it are fundamentally different. The things that we look at are different. And you made a joke some years ago, Uguti. I always complain about struggling with reading through financial statements, and those things come out once after 6 months.
Yes.
But I'm comfortable in looking at the share price each and every day. Right? Because that's just me.
Yes.
You understand?
Yes.
That's what appeals to me.
Yeah. And to a certain extent, we both would be right to say, okay, if you're not a finance expert, just look at the price and know when the price is going up or going down. The same way you do with houses, the same way you do with jerseys, the same way you do with cars. 99% of us don't know how to tell a quality house from a non-quality house because we're not engineers. 99% of the time, we don't know how to tell a quality car from a non-quality car. It's either I'm a Merc person or I'm a BMW person, no matter what Merc does. Even if that year is their flop, 99% of the time, what we do is we look at the price and then we say, I nyangen. Look at the price, look at payslip, and then suicide. Right?
Yeah, that's exactly
Since you're good at doing that, or since you've survived so far doing that, this might come more naturally to you. It's just now look at price is here are the tools for looking at price.
Exactly.
Whereas I'm more the, okay, I actually like houses and I actually like engineering. And I can tell if you give me enough time, hence I say financials only come out once every 6 months. So if you don't understand them, you have 6 months to understand them. Unlike if you don't understand price, you have that day to understand it. Otherwise, you will feel immediately why you need to understand price. And that's why a lot of people will say, I don't want to go to a Bloomer account because that speaks to people that are trading on leverage, people that are buying on credit. Because the I blew my account is the buying or the consumer equivalent of I've exceeded my credit limit and now the bank wants their money or a minimum of their money back, right? Whereas I'm saying that, look, I actually am going to buy a good quality house that for some reason the price is down. For example, now inflation is high and interest rates are high. Most likely people that previously could afford their house can't afford their house anymore. And I'm like, okay, the price of this house is now low, not because it's a bad quality house, but because a lot more of the installments are going towards paying off interest and a loan on the house.
Yeah.
So if I buy the house, it's only a matter of time till the value of the house comes back up. And I'm saying that, okay, you have 6 months to become an expert on quality of houses.
Yeah. 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 And like you have to understand that market to say, okay, what tells me if a house is a quality house? What tells
Yeah,
me if an area is a quality area that if I buy, it's fortunate that the market, we're looking at Sibanye now, it's fortunate that the market has pushed prices this low for whatever reason. We don't know why a quality company like Sibanye, as you pointed out in the financials, would
yeah,
trade this low, would be up, would be down 50-60%, right? We don't
yes,
know why that is, but it's fortunate for you as an
yes.
investor to say, I wouldn't say Muse Edgas. Let me, pick some jeans, right?
Believe
Let
it.
me,
Every single day, I've spoken to mining engineers. I've spoken to people in the community. I was in Rustenburg last week, and they couldn't believe that I can buy Sibanye shares. And I was like, yeah, I'm a shareholder in Sibanye. What's the big deal? And they can't,
yeah,
dude, you saying you own this huge operation that we work for and sustains our livelihoods. And every time we try and start some sort of, because there are people I didn't know, besides Zamazamas, there are people that are legally trying to mine, like they want to become contract miners. But Sibanya's
yeah,
price points are so low that they knock them out the market. And so they're like, Shibit, I never actually realized that instead of buying a machine that makes me mine, I can actually buy shares in the company itself. And I was like,
yeah.
where have you people been? Because in the world where I live, people think Sibanye is risky, and I understand because the share price has gone down 50%. And
Yeah.
I'm thinking, well, it's gone down 50%. Number one, first of all, nobody knows why, because when you look at the financials,
Hmm.
they're smooth, they're perfect. But
Yeah.
look at price action of everything that affects it. All we can say is that it has gone down, and
Yeah.
nobody knows why, right? That's number
Yeah.
one. Number two, luckily with things like Busibanye, whatever, we can actually see that, but actually there are things that are correlated to it. So the price of fuel went up, therefore the price to transport beans went up, therefore the price of beans went up, i.e.,
Yeah.
the platinum price went down, therefore the platinum that Sibanye is holding, the market thinks then it's less valuable. And as a result, Sibanye as a company is less valuable. And
Yeah.
I then take a position to say, okay, but we've already done the part of analyzing that you're not going to lose money from this. If Sibanye doesn't
Yeah.
like today's price for platinum, they just don't sell platinum.
Yeah.
Just hold on to it. And when the platinum price comes back up, they will sell it. Yeah, well,
Yeah.
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 Okay, let's bring it to Meta. So essentially with Meta, I said this is a good company during a time when
Hmm.
the share was $88, $120, $200, and
Yeah.
people were essentially not buying it, right? And I was
Yeah.
saying, well, the fact that the price is down doesn't mean it's a bad company. It just means that there are more down traders than there are up traders. And that's it.
Yeah.
Because
Yeah.
nothing fundamentally says this is a bad company. And now the price has gone up double. I've doubled my money, more than doubled my money. And I'm like, I, you
Yeah.
know what? This is a good company. It's just at
Hmm.
this price, it's too expensive. You know, I
Yeah.
like the quality of this jersey that Edgar's has. It's just, now if it's selling for 500 Rand when 2 months ago I was only willing to buy it for 350, I'm comfortable to sell my jersey now because to hold on to it now will just be to hold on to hurt that hey,
Yeah.
I could have made so much money. And if the price continues going up, that's fine. I'm not a jersey seller. I'm in the business of
Yeah.
companies. I'm not in the business of guessing the price that things are gonna go to. Yeah, well,
Yeah.
and that's
Yeah.
why then you think that's where the switch between investing and trading came in, where I was like, I'm cool, I've taken my profit. And you are like, no, G, actually, you may be right that the company is overpriced, but I actually have tools that show you that it will continue to be overpriced.
Yeah.
You don't have to let go of it now.
Yeah. Yeah. And like if you look at Capitec, right, for example,
Yes. Yes.
analysts have been calling Capitec expensive for an
Yes.
age.
And I'm one of them. Yes.
Right?
Yes.
People have been calling Capitec expensive. I mean, people were calling Capitec expensive at 200 Rand.
Yes.
It's now over 1,000 Rand, right?
Yes.
And to your point, fair enough, when you're looking at the company's financials,
Yes.
the price doesn't justify what you buy because
Yes.
it's expensive, right?
Yes.
It's like when
let's pause. You see, when we say because it's expensive, I think that's where our worlds fight, right?
yeah.
So Naspers and Capitec, they've been topical. Nah?
Mm.
We've been calling Capitec expensive for let's say a decade now, comfortably, right?
Yeah.
If you had bought Capitec 10 years ago, chances are you've either lost money or you've not made the same amount of money that someone who bought it at 250 did. Meaning that for the
Yeah.
last decade, Capitec has actually said, this is more or less the price that I'm at. Right?
Yeah.
And then from
Yeah.
a trading perspective, when people say Capitec is expensive, the language that traders maybe didn't have was the language to say, we're not making a call on whether Capitec is expensive or not. We're just seeing that there's demand for Capitec, therefore it can go higher.
Exactly. That's exactly it. Right. And
yeah.
why that the reason for that demand to us as traders is irrelevant.
Yes. Yes.
It doesn't matter to me why people, are all of a sudden jumping on buying Meta.
Yes. Yes.
I just know that they are.
Yes.
Right. So for example, if we look at
share your screen there.
that Meta chart.
Just share your screen so that people can see your chart. And while you're sharing screen, to your point, what people don't know is that there are certain price points or certain market caps that then are going to naturally take your price higher. For example, there are pension funds that are not allowed to invest in a company that does not have a market cap of 50 billion or more. Now, when I say Meta is a good company and I value it at 50 billion, at 50 billion, when it starts to be expensive, that is when your pension fund says you now may buy Meta. And if you've got a dumb analyst sitting managing your money at your pension fund, they most likely will just go and buy it, not because it's a good company at 50 billion, but because now the rules now allow me to buy it at 50 billion.
Yeah.
And you see that new demand has just come on board when Meta hit this new price point. As a result,
exactly. And remember, like when we're looking at the chart like this one, right? What we're looking at is crowd psychology. That's what essentially we're looking at.
Crowd psychology.
Right? Yes. So remember when if we go back to this period here in 2021, this year, right? There were, let's say, a disagreement between buyers and sellers, right? Around what was it, 294. Eh? Market came to 294, sellers
up, down,
down, up, right? And then the sellers step away, and then we see a breakout here, right? So there are people that bought Meta here. Right? And then those same people, there are people that held still held Meta here because they were still they were in profit.
Yes. Yes. They
After
were
having
still
bought
making
them.
money from,
Yeah.
for example, now, if Meta drops 50% now, I'm still good.
You're still in the money.
I'm still in the
Right?
money. Yes.
Yeah. So now when it breaks lower, human psychology says maybe it'll turn back higher.
Yes.
Maybe it'll turn back higher. Maybe,
Yes.
except so for 1, 2, how many weeks? It didn't for 75 weeks. For
Yes.
over a year, it didn't come back,
Yes.
right?
It didn't come back.
So now it didn't come back to. So if you bought here at 294, right,
Yes.
and you
Yes.
still had
Yes.
when it broke below 294, it didn't come
Yes.
back for 75 weeks.
And now this is where we talk about psychology, because the first part, when we're talking about, are you a price person or are you a value of the company person? That's not
Yeah,
psychology. That's just facts. Do you
yeah,
understand quality more or do you understand price more? Right?
exactly. Yeah,
Sharp.
yeah,
Now, when we're dealing with psychology, you said after it broke 294, it stayed there for 75 weeks. The 75 weeks in a year, there's 52 weeks.
yeah,
So to be clear, 75 weeks is a year and a half that you were in a loss position. And
yes,
the reason I emphasize that is because now we're no longer dealing with the value of this thing or the quality of this thing. Now we're dealing with, if you can hold this thing for 75 weeks, you have a huge capacity for pain. And that's why they normally would say you're a contrarian.
yeah,
You have to be someone that is able to go against the herd for you to. And I used to think, to be a value investor, it seems for you to be an investor, period, you have to be willing to
yeah,
go against the herd, because that can easily happen to any company that you own, that you believe in.
yeah, yeah. And that collapse here, right?
Yeah.
It doesn't change the quality of the company itself,
Yes. Yes. I still
right?
continue to
It's
get
just
dividends.
people.
I still continue to get
Yeah,
my money. People continue to use Instagram.
yeah.
Okay.
We're still on WhatsApp, we're still on Facebook, we're still on Instagram, Metaverse, on
Yes.
all the products that Facebook is generating income from. Those are
Yes.
still in place, right?
Yes.
The share price collapsing, what was it? Down to that low there. The share price collapsing
To 80.
76%.
Yes. That was
It
me in there,
doesn't change
by
the
the way.
quality of the company,
Yeah.
right? But now, if
That
we
was me in there. Can we just pause and give me a moment of silence? How but that's why I say it's a principle of don't lose money. And I think at this point, this is where maybe we don't get to explain why, after the company being 76% down, I would still feel as if, yeah, but I haven't lost the money, because the quality of the company hasn't changed in that year and a half. If anything,
yeah,
the quality has actually gotten better, because remember, they launched Meta, they launched the VR headsets, they cut prices, cut costs by firing engineers. And these are all things you don't care about, by the way. And I'm sure my investors also, when they open their portfolio, all they see is, yes, yes, we're losing money. They don't care at this point. And I'm saying,
yeah, yeah,
I wasn't being reckless. You hadn't lost money because the quality of the company was actually improving more and more. Even though the price was at its lowest, I could
yeah,
see, and I was reading reports every year, every quarter, every 6 months, that says that Meta is a better and a better and a better company.
yeah, yeah.
Yeah.
And
Okay.
when I look at price, right? When I look at the price action, the market has been falling quite rapidly.
Yeah.
Um, and I look at various patterns, right?
Yeah.
So one of my favorite patterns is a cup and handle,
Yeah.
So you can see like a cup and a little handle. Usually
Yeah.
the market
Okay, I see
breaks
it.
higher.
Yeah.
That would be similar to a pattern that you picked up, that if a current ratio is at least twice as much as the current liabilities, that's a good company,
Yes.
right?
Yeah.
If I see this pattern, I see the likelihood of the price going up is much higher,
Okay.
right? And then
Yes.
there's rules on where to place a stop or where to place a target, right?
Yeah.
I like this tool on TradingView because we can go back in time and kind of so when the market breaks here, right?
Yeah.
When the market breaks here, it confirms this pattern. This
Yes.
would trigger me in, right?
Okay.
To say now there's demand into the stock, right?
Yes.
But remember, the market has been falling quite rapidly. And then I say, hang on, if I'm right that the market is going higher, it shouldn't go below 124, for example. It shouldn't take out this low.
Yes. Yes.
And then if I'm really being conservative with my stop, it shouldn't take out that low if I'm right.
Yes. Yes.
Right. And then as the market continues,
Yes.
that stop loss moves higher and higher, and say, okay, the market is breaking. The buyers that were here, they should start selling, and they
Yes.
did, right?
Yes. Yes.
But they immediately, the buyers that were there came back, right?
Yeah.
To sell, because maybe they thought this is the low.
Yeah.
Yeah, but
Yes.
when they step out and the market starts to break higher, I'm like, if I'm still right on this trade, the market shouldn't come to 161. And remember, I started with a stop loss there
Yes.
at let's say 104, right? Or 124,
Yes.
right? So now if I say, okay, the market is breaking higher, which means the demand for the company has come back in,
Yeah.
right? And if I'm still right that the market is the demand for this company is still high,
Yes.
we shouldn't trade below that price.
Yes.
Now my stop loss is at 161, and remember, I bought somewhere there on that breakout there. So now what happens, it puts me in a position where I can't lose money anymore.
I have a question for you, Ne. So someone watching up to this point would say, why don't you guys just partner? Because you sound like, first of all, Ne, it actually first of all sounds like trading is better than investing, right?
Yeah.
But over and above that, it also sounds like, why don't you guys just partner then? Yeah, well, and
Yeah.
at this point, I would say, I was still on.
Yeah, we're still on.
Yeah, for some reason, my screen just disappeared. At this point, I would say, again, this is why now this is psychology, right? There are people that, have you ever seen when you want to buy something, you check the price and you check your savings and you're like, okay, I'm saving towards that thing. I hope the price doesn't change. And
Yeah.
there are people that get anxiety from that feeling of checking the price every day.
Yeah.
You've got a psychology that doesn't get anxiety of checking the price every day. You've got rules in place. This is it. I'm done. You more
Yeah.
likely will go to the shop and stick to your grocery list. I more
Yeah.
likely will get to the shop and realize, oh, snap, this soap is generally 500 Rand. Today it's 250, and this is a good quality soap. Let me buy it in bulk.
Yeah. Yeah.
Well,
That's exactly it. Yeah.
and coming to then why it's not an easy, why don't you guys partner, right? First of all, I think it's very important to understand that even if I show you the quality of the company, that means nothing to you because
Yeah.
you're still just going to look at, is the price going up or is the price going down?
Yeah. Yeah,
So,
that's exactly it.
so me partnering with you is not necessarily going to benefit you either than for you to just know that, okay, we're not dealing with something that's going to zero, for example.
Yeah.
Right?
Yeah.
Yeah. On my side, again, if we've established that this is a good quality product, I would advise over time, just keep buying it whenever it's cheap. And
Yeah.
when it gets expensive, either sell it or just hold it and take dividends, right?
Yeah.
And I would say why I wouldn't have value in inverted commas on the other end, partnering with you is because, and mind you, this is for the general audience. You and I have got a working
Yeah.
relationship much, much longer than this. Nah.
Yeah.
Statistically speaking, nah, you can't be a trader over a long time if you're not disciplined. And
Yeah.
that way I would then come in and say, okay, we make up for the lack of discipline with just buying the right thing or the quality product. That way,
Yeah.
you don't have to be disciplined. Because if all of us were efficient in our consumption, we wouldn't have storages in our house because that's all that a house is. It's a storage of all the things that you're too lazy to go to the shop and buy.
Yeah. 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 Yeah.
Right?
Yeah.
If we all consume just what we need, we would have today's meals and tonight's bed for that matter. Tomorrow morning we'd
Yeah.
wake, sell the bed. We don't need it for the next 16 hours. And then 16
Yeah.
hours later, come back. What's the price of
Buy
bed?
another bed.
Buy another bed. And
Yeah.
people would say, yeah, but that's a lot of admin. Yeah, that's because that's not the discipline that you have.
Yeah.
Somebody else has that discipline of, I will be a bed buyer every day. And over the course of my life, I will enjoy good quality sleep from a new mattress every single day.
Yeah.
Yeah. Well, all right.
Yeah. Yeah.
Yeah.
That. Yeah. And you also like, with your clients, right? With your
Yeah.
investors, what they are doing is they're abstracting that anxiety to you
Yes.
of
Yes.
seeing a share price fall
Yes.
to you.
Yes.
Because, to your point, if you're managing my portfolio, I am not disciplined or not capable of managing myself in the face of a falling stock.
Yes.
Right?
Yes.
So I outsource that,
Yes.
psychological battle to you as a
Yes.
portfolio manager.
Yes.
Right? And if, let's say, you and I would partner up, right? You've selected, okay, these are the group of quality companies that we're going to look at, that we
Yes.
want to own in our
Yes.
portfolio. Yeah. And then now it goes back to that, timing the market is better than timing the market,
Yes.
right? That's just coming from a space of, because you can time the market.
Yes.
It's not that difficult, right?
Yes. Yes. For a
But
trader.
it's not that difficult for
Yes.
me as a trader because I'm able to
Yes.
look at this thing every day,
Yes.
right? So now you're outsourcing the timing the market part.
Yes.
Yeah,
Yes.
but I don't have the discipline to time the market because what if the right time to buy Sibanye is when I'm on a week long travel to Rustenburg to check out Sibanye for that matter,
Yes.
and
Yes.
I'm unaware of what's happening in the stock market.
Yes.
And me as a trader was like, I am not going to drive to Rustenburg to check out Sibanye because even if I go there, I'm not going to understand what I'm seeing.
Yes.
So I'm going to outsource that work to someone like you while I look at the price.
Yes.
Right. But now it's the reason why it's not just a simple, why don't you just partner up and then, you
Yes.
exponentially expand the returns. Right. Uguti, it's not that easy to outsource anxiety to someone else because it's
Yes.
still your money.
Yes. And
right?
yes. And even certain parts actually, ne, you would say buy Meta now, actually, because you project that from 315 it's gonna go to 380, ne?
Yeah,
But it's already in the expensive zone for me. So you saying buy Meta, you're not saying Meta is a good quality company now. You say no, the price is gonna go up now, but it's up to me to then do the distinction of realizing that if it was within my good quality or good price range, and he said buy now. So, for example, at $88, you would have said to me, don't buy yet. So you see there where it opened. You see, let's look at those last two red candles, right?
this one, yeah,
Yes.
yeah,
So the one before that,
this
the one
one.
before that. So just go to the end of the candle. Let's see what it thing. So at
It was at
$99,
99. Yeah,
at $99, I would have been happy buying. You would have said, hey, Njam, it's still gonna keep going down. And I would have said, it's
yeah,
cool. My psychology allows me. But
yeah.
at when it
Even
turned,
at 124,
yes,
even
when
at 124, it'd still be like, no, I'm not comfortable buying
yes,
unless it breaks 124.
and that's you as a trader. Me as
Yeah,
a investor, I'm saying we're still good at 124, right?
yeah,
And that's where the relationship then needs to merge perfectly to say you need to be able to understand each other so well that when you offside, to use a soccer analogy, and he says, I'm about to make a pass, realize that you're offside. There's nothing that's going
yeah,
to allow you to keep the goal. So when
yeah,
the price is expensive and he says buy, just know that it's fine. His job is to say buy and sell. His job is not to check, are we good or not at this point,
exactly.
right?
Yeah, because
Yes,
you remember these things in terms of the timing are random, so to
yes,
speak, right?
yes,
Because this turn here could have easily been here,
yes, yes,
right? You
yes,
could have easily said Meta is cheap at what's this 186
yes,
for whatever reason.
which is where I had bought as well.
Yeah, we could have said I know at 186 that this thing is cheap,
Yes,
right? But it continued to go down. What is it? A further 50%.
yes, yeah.
You understand? It continued to go down a further 50%. You
Ecology
say
just, yeah,
it's still cheap, and
yeah,
now it's even cheaper.
yeah,
Yeah, well, so
yeah,
now at 99, it's even more attractive to you as an investor. But to me
yeah,
as a trader, it's like not a chance, not
yes,
touching this thing, not with a stick, right? But now it starts to break 124. I'm like, okay, now we're starting to have a different
yeah,
conversation, right?
yeah,
And now maybe it's within, because cheapness is a range,
yes,
right?
yes,
Cheapness is a range, right? We'll be in agreement for a while. It
yes,
may be at 220, you
yes,
start to be a little bit uncomfortable. Now you're in profit, but a bit uncomfortable because it's starting to get on the more expensive end of things.
yeah.
And then I
There's
come to you and say,
my G,
no,
there's
if
a minute left, ne? So I'll let you wrap up, ne?
yeah.
Yeah,
So as the market, you see, for example, when you come here,
yeah.
let me just remove this thing. When it breaks the market here, when it breaks this 294, which is the level that we started with,
By
you would
then
have said,
I'm buying.
yeah, it's expensive. But me,
Yeah,
when I'm looking at this chart, like, man, thing is breaking a long-term
yeah,
resistance level or long-term support level.
yeah,
It's time to buy some more,
yes,
because breaking this level puts the probability of the stock hitting 380 even much higher. Yeah, but to go back to the point that you have to do your own thing, that's no longer your profit to make
yes.
because you've taken